everyone, welcome back to this week's Technical Insights. Alibaba shares rose sharply this week as a spin-off plan is seen as unlocking value for the conglomerate. Alibaba announced last Tuesday, 28 March, after market close that it plans to split into 6 different units that will individually raise funds and explore IPO listings, a move that market participants expect to help unlock value for the firm. Alibaba's US-listed share rose 14% that night, while their Hong Kong-listed shares managed to open up close to 15% the following morning. Earlier this week, it was reported that Alibaba co-founder Jack Ma was also spotted back in China after more than a year abroad. The split is the biggest overhaul of the Chinese e-commerce leader since its inception more than 2 decades ago, and could draw support from the Chinese government regulators who have been concerned about the monopolistic nature of the tech giant. Other Chinese tech stocks also rose across the board at the market open on Wednesday, 29 March. Top gainers including JD.com soared around 6.5%, Tencent jumped around 5%, and Meituan climbed around 4%. Let's now take a look at how these Chinese tech stocks has performed for the whole of last week. First, let's take a look at Alibaba's Hong Kong listed shares. For the past 1 week, Alibaba share price is up 17.5%. For the past 1 month, it's up 15.8%. Year to date, it is up 17.15%. Since the low that we observed in March 2023 at the price of around 78 Hong Kong dollars or just below the $80 handle, prices have rebounded firmly to close last Friday at $100.40. So this level is a pretty significant level as it is above the high that we observed in August last year. Year-to-date high is in January, where we see that prices reach around the level of 118 Hong Kong dollars. Now, this level also coincides with the level that we observed in the March high in the previous year. Just slightly above this level, you have the 122 Hong Kong dollars level, which was the July high that we observed in the year of 2022. Now, if you see that the support level that we observed this year in March at around the $78 level, that was the May double bottom formation that we observed last year. And if we include the April low that we observed, this could well become a triple bottom formation, which is a very strong support level. So the big rebound that we see in the share price since it touched the $80 handle level wasn't much of a surprise. If you look at the technical indicators of MACD around the 22nd of March, you can see that the MACD line actually crossed above the signal lines, meaning that we are having an inflection point over here and prices are going to rebound upwards. And if you look at the MACD line recently, it has sort of diverted away or create a divergence away from the signal line, which means that the momentum in the share price moving upwards is gaining much of a momentum. If you look at the RSI, the reading as of last Friday closed at 66.51, also shows that there's very healthy uptrend momentum in the share price. And it has yet to breach the 70-point mark, which is the oversold indication. If you look at the RSI during the January period where it breached the 70-point overbought signal, you can see that prices have trended above the 70-point oversold signal for close to a month period. And we could see that formation sort of repeat in the month of April. Now, if that's going to happen, we will not be surprised to see that Alibaba share price continue to rise and retest the year-to-date high in January at the price level of 118 Hong Kong dollars, which is about a 20% upside from last Friday close of $100.40. So overall, we think that the momentum in Alibaba share price is likely going to continue upwards, and we are likely to see it retest the year-to-date high of 118 Hong Kong dollars in the next few weeks. Next, the second stock that we'll be analyzing this week is JD.com. JD.com Hong Kong listed shares actually rose 10.4% last week, but for the past 1 month, it's down 1.21%. Year to date, it is down 19.25%. The low that we observed recently in JD.com share price was the March low around the price level of 145 Hong Kong dollars. Now, prices have rebounded quite a bit as well, around the 10% region since the news on 28 March of Alibaba Good News. So, will this uptrend continue? If you look at the next resistance level of JD.com share price, that will be the upper bound of the Bollinger Band at 185 Hong Kong dollars. and that has found a confluence with the May 2022 low around the $189 level. So this would be the first resistance level that JD.com is likely going to test in the next few weeks. Above that, we also have the August double bottom formation that we observe at a price level of 213 Hong Kong dollars. And just slightly above that, we have the November and December high at around the 228 Hong Kong dollars as well as 242 Hong Kong dollars level respectively. So if you look at the RSI indicator, it has crossed above the 50-point mark as of last Friday close. So that means that prices are starting to gain momentum now. And if you observe the MACD indicator, the MACD histogram is also indicating that the uptrend momentum that we see for the past week is also gaining in strength with the MACD line diverging away from the signal line. So this could signal that the JD.com share price is just at the beginning phase of its reversal upside, and hence there's still a long way to go, and it could possibly retest the August double bottom formation at a $213 Hong Kong level, and even possibly go and retest November high at 228 as well as the December high at 242 Hong Kong dollars level, because the RSI level still has some way to go before it touches the 70-point mark, which is the oversold signal. So JD.com is still lagging behind how the performance of Alibaba Group has been performing last week, and that could be a lagger, which means that if you are late into the game of the Chinese tech stock rise, you can still get into JD.com to see that the similar performance might actually copy that from the Alibaba Group performance in the past 1 week. The third Chinese tech stock that we'll be analyzing this week is Tencent Holdings. Tencent Holdings closed last Friday at around 385 Hong Kong dollars. For the past 1 week, it is up 1.53%. For the past 1 month, it is up 11.05%. And year to date, it's up an impressive 21.62%. Year to date low that we observe for Tencent Holdings is around the 330 Hong Kong dollars level, and year to date high is around the 416 Hong Kong dollars level. Now, the close as of last Friday at $385 level is actually a very crucial level, because that was the high that we observed in June and March of 2022 last year. So this is actually a double top formation that we observed last year, which is a strong resistance level. And if prices were to close above this level of around 385 or 380 Hong Kong dollars, which means that this resistance level might have a change in polarity and becomes a support level for Tencent Holdings share price going forward. Now, if we use this share price as a support level, the next resistance it will test is the year-to-date high that we see at 416 Hong Kong dollars level. Now, the MACD line has crossed above the signal line on 23rd of March, which means that we may see a reversal of the share price upward, and then that momentum is also telling us that it's gaining strength, because the MACD histogram shows that the momentum of the share price is gaining. The RSI indicator at the close of last Friday at 61.98 is also showing us that there is healthy uptrend and strong momentum in the upside movement. So it still has some way to go before it hits the 70-point mark, which is the overbought signal indication, which means a reversal might happen there, which is what we observed in January. But from now, it's still some point away from there, and I do not foresee it crossing above the 70-point mark until we retest the January high. So with that, we believe that Tencent Holdings share price will also continue to rise as per the other Chinese tech stock and retest their year-to-date high of $416 in the next few weeks. So if that happens, traders will have to look out for the RSI hitting above the 70-point oversold mark, and thereby sort of take note of any reversal that might happen into Tencent Holdings share price. So with that, that is our coverage of this week's technical insights. We hope that you find that useful, and do stay tuned next week for our next episode of Technical Insights.